All right, let's get right into it. One of the biggest banks in the world, JPMorgan, is making a move. And it's one of those moves that's incredibly quiet, but has huge, monumental implications. They're shifting the very heart of their gold trading operations. And believe me, it says a lot about where the world's financial power is headed. So that brings us to the big question for this whole explanator. Why is Wall Street's gold making this secret trip to the east? I mean, this isn't just about packing up some desks and computers. No, this is a major strategic pivot, and it's going to ripple across the entire global gold market. Let's unpack this.
So, first things first. To understand why they're going to a new place, you got to understand what they're leaving behind. The whole story really starts with the insane pressure that's been building on banks like JPMorgan in their old stopping grounds, New York and London.
Now, there's a key term you need to know here: spoofing. Just imagine this. You place a massive order to buy gold, which makes everyone else think, whoa, the price is about to shoot up. But you never intended to buy it. You cancel at the last second and then profit off the chaos you just created. It's a shady practice that's been hanging over the precious metals market for years.
And this number, this number shows you just how serious the consequences are. In 2020, JPMorgan got slammed with a $920 million fine for spoofing. I mean, come on, that's not a slap on the wrist. When you're paying fines that big, it's a huge wake-up call to completely rethink how and where you're doing business.
And honestly, that massive fine was just the tip of the iceberg. What you're seeing in the West is kind of a perfect storm for these big banks. You've got regulators breathing down your neck, the costs of just staying compliant are going through the roof, and then you have new rules like Basel III, which basically make it more expensive to do business. And on top of all that, there's always the threat of another billion-dollar lawsuit. It just became too hot, too risky.
Okay, so that's the push factor, all the reasons to get out of the West. But what about the pull? What's so attractive about the East? Let's flip to the other side of this story, because this is where it gets really, really interesting.
What I love about this chart is how simple it is. It answers the most basic question: who's actually buying physical gold? And the answer, by a long shot, is Asia. We're talking about China and India, where gold isn't just some number on a screen. It's deeply cultural. It's for weddings, for festivals, for family savings. They are the market. So if you're in the gold business, you have to follow the metal.
And this right here perfectly illustrates the two different worlds. For years, the West has been all about paper gold. Futures contracts, complex derivatives, basically bets on the price of gold. But the East, that's where physical metal is king. The trading there is all about actual gold bars and coins, driven by real-world supply and demand. So JPMorgan isn't just changing their address, they're moving from the world of paper to the world of physical.
This quote just nails the whole strategy, doesn't it? It's not a choice anymore. For a massive player like JPMorgan, being in Asia in a serious way isn't just a nice-to-have. It's absolutely critical if you want to dominate the future of commodities.
But why Singapore? Why there specifically? Well, it really boils down to three things. One, its location is a strategic bullseye. It's the perfect bridge between the Middle East, India, China, and Australia. Two, the government there is incredibly pro-business, with great tax deals and, crucially, political stability. And three, they have built world-class facilities for storing and moving physical gold, all tax-free. It's the total package. It's a huge strategic move, and we're about to get into the global implications. We love breaking down these big shifts for you, so if you're finding this useful, a quick like or subscribe really helps us keep these explainers coming.
All right, so we've seen the push from the West and the pull from the East. Now let's zoom out and see how this one move by one company is actually redrawing the entire map of the global gold trade. This is the big picture.
For pretty much a century, the entire gold world spun on a single axis: New York and London. New York handled the futures contracts, and London handled the clearing, the backstage work of settling all the trades. Together, they basically set the gold price for the rest of the planet. But now, a new axis is rising up to challenge that old guard. It's centered on Asia's massive appetite for physical gold, and Singapore is quickly becoming its international hub. This new center of power is built on something real and tangible, not just financial promises.
So what we're seeing here is something people call the de-Westernization of gold. The influence of places like the Shanghai Gold Exchange is just getting bigger and bigger, and that old monopoly on setting the price, held for so long by London and New York, well, it's finally starting to crack.
So, where does that leave us? The old world with two main centers is over. What's emerging is a new, multipolar era for gold, and the best way to think about it is as a triangle of power.
This table really sums it all up perfectly. Geographically, it's about getting closer to the real buyers. On the regulation side, it's about spreading out your risk. From a market perspective, it's a clear shift from paper to physical. And it's all about gaining influence over pricing and sending a loud signal to every other bank that Asia is the new battleground.
And this brings us to the final big idea. The future isn't about one city replacing another. It's about a new, more balanced global structure, this triangle of power, with three distinct but totally interconnected corners of the market.
And here's what that new map looks like. New York is going to stay the king of derivatives and futures. London will still be essential for clearing trades and leasing gold, but that powerful new third corner, that's Singapore and Shanghai, the undisputed home for physical trading and delivery. Power isn't just in one or two places anymore, it's spread out.
And that leaves us with one last really important question to think about. This move by JPMorgan is a massive sign that the center of financial gravity is shifting east. We're seeing it happen with gold, which is often like the canary in the coal mine for these big geopolitical shifts. So the real question is, what's next? What other asset is going to follow gold's lead?